Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Thursday, the 3rd of November, 2022, just after 6 p.m. Central Time, and yes, I'm back in Chicago. I see some of you complained when you heard my voice down on my updates. Folks, I wasn't in my studio. I was doing that off a very simple laptop. If you think the voice on that, and then you go to YouTube and you broadcast it, says the same quality, it doesn't. We have software that we adjusted with it. Still couldn't get it to work quite that way. There is a difference. This should sound pretty good to you. So, where are we? Well, it's pretty simple. Fed Chair Powell basically told everybody, hey, my game. And how I'm playing this game is you academics, others that have ideas, I understand you think jobs will be killing it and will destroy the job market. And he said, no, we're not. He said, we have inflation that has to be beaten down. The jobs market is so strong that I'm talking I being him, that he's not even convinced we can do a lot of damage to it, which keeps, unfortunately, a certain part of inflation very sticky. And that's where you're at. Now, he also said this isn't a race. You don't have to keep going with 75 basis point hikes each time because there's a lag effect. And off that lag effect, eventually we will start seeing, he hopes, some of the other numbers in the economy slip back down and the inflation-related numbers slip back. We'll get an idea tomorrow about jobs, but he's already told you they don't think they can beat the jobs market down very much. So it's going to be CPI we really have to focus on. And let's assume that the CPI number even slips a little. Does it keep the Fed from 25 to 50 basis point hikes? No. He's told you that off the September dot plot, that's not going to work. You got to now look at a new one in December because it's going to be longer. In other words, they're going to raise rates more. And I think what he told you in code of the Fed was it's going to be something in the neighborhood of 4.75 to 5.25% right now. Get sticky, it could be a 5.5%. There's no top number. He's going to keep going quarter point hikes until he, not the team, he is convinced that the market is now backing off. You don't have to agree with me. I'm pretty sure I'm right on that. When I look at the gold chart, let's talk about gold. Gold has everything going against it. Yeah, you'll get bounces from time to time, but come on. Every central bank that I'm aware of, other than Turkey, is fighting inflation. Turkey's goal with inflation is we'll lower rates low enough where we'll beat inflation. That hasn't worked. They have 85% inflation. The rest of the sane world that's fighting inflation is looking at it and saying, how do we beat it down? You have to slow your economy down. Remember, central banks cannot create supply of commodities. They can control demand for those supplies of commodities by making the economy very restrictive. Well, why do I want to own gold? I know why. I saw the Barrick chairman today, Barrick Gold, big company, talk about gold. And what did he have to say? He said the right thing. It's a storage of value. End of discussion. The idea that it's keeping up with inflation, total nonsense. It's not keeping up with inflation, not in US dollar terms. Therefore, it's a storage of value in uncertain times. Okay, but it's not a crazy uncertain time. What we're doing right now is fighting inflation. Yes, there's a war in the world. It isn't good. Yes, North Korea's firing off missiles. I guess they're getting rid of all their old ones because I think they fired 30 of them in the past 40 hours or something. So they just are going through their missiles to let everybody know. And I told you this about a month and a half ago. I said they feel left out. So they need to get the world back to understand they're there. And that's what they're doing right now. So as you're coming down here, you've got your bias down because you're under the 18-week average. When chartists like numbers on a chart to give them an idea where they're at in reference to something. My way of teaching charting, and this is on my course on our website under education at iraepstein.com, is when you're under a key average, and I consider the 18-day average of closes a key average, the bias is down. When you're over it, the bias is up. It is a filter. And what it's often filtering is what's going on in the action in the chart with a swing line. Now, I wrote the tool for the swing line. And in this tool, I did it when my son, who's now near 40, was just turning to be a teenager, 13, 12 years old, right in there. And I said, I could teach you to look at any chart, and you can go up to any stranger and tell them, is the market in a bull trend or a bear trend? You don't need anything else to do it. And he said, how do you define it? And I said, well, an uptrend is higher highs, higher lows. And a downtrend's lower highs, lower lows. And he rightly said, well, how do I tell which one is which without the swing line? And I said, you can't. And that's what people don't get. They don't know how to do that. So I taught him how to draw this. I taught him by hand. Then, of course, I had created it on a chart so it would just plot out. And once you do it, you get it. You're in a downtrend unless you take out 1673.10. The market is under the 18-day average of closes. The bias is down. The trend is down. Okay, then where might support come in? Well, I like my friend called the Bollinger Band. John Bollinger developed this. And the way it works is so simple. It's an algorithm designed to keep the market trading within it 95% of the time. So if the market hits the band, what are the odds of it staying under it? 5% of the time. But how do you tell when that 5% should gain momentum or not and break out of sometimes what we get sideways action here? Eventually markets trend. That's where I added momentum. So I took what he did another step further, and with one of the people that I knew that created this, George Linn of Slow Stochastics, who's no longer with us, by the way, I really grasped onto this, studied it. I used to be a student of MACD, RSIs, I used volume on trading. I can tell you all the things I used, and I got rid of 99% of it. And the reason I got rid of it is the more you put on a chart, the more confused you get. And what happens at that point in time is one piece is saying buy, another sell, and it's never heaven where they're all saying the same thing. So I needed each thing to, if you will, filter out trades in a certain way, but not interfere with each other. Why would somebody have MACD, RSI, slow stochastics, or fast stochastics on a chart? Makes no sense to me. So went in, developed my technique. Well, when you get down to a Bollinger Band, if you're not embedded, I teach, hey, the odds are momentum saying that you're already getting into what? Oversold area. It either embeds or it doesn't. But if it's oversold, the odds favor how do you correct an oversold market? You either get a bounce away from it, or you embed, which means you lock in a trend like you did back here, and then I can make the argument it's going to lean on that band and push it down, ideally until it's lost, like it did here, and then you return to a neutral number. So that is what I teach. It's in my courses, my Enhanced Bollinger Band course and the other. You will pick this up. Next, I look at the gold-silver ratio. Okay, the lower the numbers, it means in a perfect world, you got your shopping basket, you're putting in ounces of silver, you're going to your friendly coin dealer, gold-silver dealer, who of course doesn't charge a commission. He's just waiting for you to come in. He's got his smile on, and he's saying, oh, bring that to me. Yes, right now, I want 83.83 ounces of silver to get an ounce of gold. And the lower it goes, obviously silver's worth more money because I need fewer ounces of silver to get that ounce of gold. Well, when I look at silver, I see this because silver's fighting to be over the 18-day average. The bias is up. In gold, the bias is down. This market's trying to say I can come up a little bit, but that's all that it's saying. It's not in an uptrend. It has a lower low and a higher high. I don't see that as a trend. Copper's caught in no man's land. COVID, no COVID. Commission in China to ease the COVID restriction? No, we won't do that today. We'll go the other way. Foxconn telling Apple they can't make their phones because of these problems. Other companies, the same thing. Why do you want to do business in China? Run American business. Run if you can do it. It's that simple. Okay, you're not going to beat this COVID animal. 2 years ago, when it came out, I made a prediction. After everything I had read, I figured out, and I think I'm right, this would become the flu in Western countries. What do I mean by that? We'd have vaccines. It's going to be a regular occurrence until they can beat it. I'm not sure they'll ever beat it. We get flu shots every year. And you deal with it. Other countries like China are saying, you know how we'll deal with it? You're going to go into a lockdown. When there's no more COVID, you can come out again. Oh, sure. And that works on a big economy and supply chain issues and the like. The problem for copper is that copper is consumed, half of the world's consumption is consumed by China. It's still that big engine. Now, will that engine over time lose some of it? Yeah, it will. As people get richer, they want more money, and all of a sudden getting goods made in China, you start looking at it, well, maybe Vietnam's better. Maybe Malaysia's better. I'm looking at things I buy. Go to a Target. Take a look in a Target. And you tell me where the different goods are made. I make a habit of looking around there and taking a look. Interesting what's going on. Take a look at platinum. You've got the bias down, the trend up, or is it? No. You got the trend down, lower highs, lower lows, the bias down, and momentum down. Everything's bearish right now. Until this market gets back over 961, it could easily be going to 896.20. You already keep hitting the lower Bollinger Bands, bouncing. There's a key average the market's hitting there. You see that in my enhanced course. The pros are selling it and they're covering it each time it falls back. I've been talking about this in my subscriber video. And yes, while I was gone each morning, other than I think it was yesterday, when I traveled, I took 1 day off of the whole time that I was gone and didn't put out a morning subscriber video. And I think my subscribers know that I work hard for them. I was talking about these trades back and forth. Dollar index, pretty neutral. You've got the trend down, the bias up, momentum had been flat, you're trying to come up. But even if you rally from here and you get back up here to the 113.84 level, taking out that high, so what? You'd have a lower low, higher high. This is what you're doing. Now, it's hard to be bearish the dollar for very long when we, with the strongest economy and the most aggressive policy on interest rates, keep moving the way we are. Just remember that. People that say it's the time for the dollar to peak, I wish them the best. From a fundamental point of view, that's a hard bet until the Fed gets to the point where the Fed says possibly, you know, we're in those last hikes. We're not there yet. Fed Chair Powell said we have not got this beast tamed. We have not got the genie back in the bottle. We don't even know that we're on the right path completely yet because we have to see core CPI fall. And until it falls, what do? Well, I hope what you do is you join me in the mornings in my morning futures video. Now, this is different than the ones on YouTube. I'm going to talk to you there about the day's events, what happened in Asia overnight, Europe, back to America, the reports of the day that are coming out, the expectations. Then we go into 40 charts. And remember, the markets are open at this time. I'm recording about 5:30 a.m. Central Time. I'm covering all these different markets with you. And as I'm covering these markets, I'm going to bring up daily and weekly charts, lay out a trade strategy, why I see it, where it's at, and what I think you do. Will I have losing trades? It's a guarantee. Will I have winning trades? Yes, I'm going to have winning trades. Will I try to make sense? I will. Will I give you a game plan? Yes. Do I want you to follow it? I don't care. Why don't I care? Because I'm not managing your money. I don't want to manage your money. I don't want to manage anybody's money. All right. What I want to do is be the guy you go to and you say, I want to see what he thinks in the market. What's he saying? What's he say? Are you aware that my subscribers write me? They can ask me things on the market. I make a short video, get it right back to them. Time allotted to me. And I make time every day to do a certain amount of those. So if I get the questions, I will answer them. So how do you find out and give this all a go? It's simple. Go to our website under the word Research, that's where it belongs. It's all laid out for you there. To get there, you can either follow me up here with your cursor on your computer screen or go to iraepstein.com research. Either one will get you there. I'm Ira Epstein. Good to be back. Talk to you tomorrow. Take care.